Hi, and welcome to Random Roger's Big Picture for the week of Labor Day 2007. Just one thing on the agenda, really, kind of in context with what we've been talking about all week, or a couple of times this week, about looking out to the long term, that sort of thing. There was one reader, I can't tell from the comments if he was calling me complacent or not, and maybe he was, and maybe I am, although I have to say, my mantra of sort, one of my mantras, I guess, I've got a couple probably, is pick an exit strategy, stick to it, and don't worry about it until you need to use it. I'm not sure that makes me complacent. I kind of pound the table on that over and over, but maybe it does. To that end, I made a comment, something about, if you've got with a 20-year time horizon, and someone jumped in there, and it was in that same thread, one person I think was calling me complacent, but maybe he wasn't. Another person said, well, what if you've got only 5 to 10 years, and okay, you need to, if you're doing this yourself, you need to be intelligent about your time horizon and what your mix is between stocks and bonds. If you can't absorb, if you're 5 years out and you're just making it by the skin of your teeth, dollar-wise, with regard to how much income you're going to need, okay, well, you need to allocate properly and prudently to that fact. In that situation, you obviously can't absorb a big hit. But I wanted to talk a little bit about, focus more on, I guess, complacency of bad things happening. Probably the worst realistic outcome. I just don't subscribe to Michael Pansner's belief that, if you read his book, it's that society is effectively going to crumble. What I think is a possible worst-case scenario, as I think about it, and I'm not sure if there's going to be a consequence yet. Haven't reconciled it yet with whatever it is the Fed and the President are really going to end up doing in the mortgage issue and everything that touches mortgages. Haven't reconciled what the result's going to be, but a worst-case scenario result, let's put it that way, a worst-case scenario that I think is plausible, is some sort of Japan-like, decade-long malaise, or more than a decade, depending on how you want to look at it. For those who don't know, the Nikkei peaked in something like 1989 or 1990, up near 40,000. It's at 16,000-ish today. I believe it bottomed out at 7,000. But whatever the case may be, people in Japan throughout the 90s, they're the same as you. They needed to, sock money away. They needed their money to grow, so they looked outside of Japan. And there is a possibility that if, it's not something to worry about, if it happens, what would you do? You probably need to look elsewhere. The first criticism will be that the U.S. would take down every other country on the planet economically, and stock markets would follow. I don't think that's quite true. I think as an initial reaction, to the extent that there might be any panics involved, yes, I would expect other markets to go down in sympathy during states of panic. But in terms of a prolonged, and there are a lot of countries you can look at going, starting out at the market peak in 2000, several markets that I found that went down with us in lockstep until like mid 2001, and then they started to decouple and started to do a little better. So for those countries, the bad wasn't even quite a year and a half. Something to think about, and I think that type of thing would repeat again. There would be some initial sympathetic downward move in the light of some Japan-like scenario, but at some point, these countries, these markets, these economies would go on about the business of, growing without us. And that especially ties in from the standpoint of a lot of these countries. It's something I first tied into on the blog, almost right out of the chute of starting writing it 3 years ago, was that these countries, whether I'm right about which ones or not is a different matter, but that a lot of these countries are going to become more economically relevant on the global scene than they were 3 years ago, than they are now, and so forth. A lot of these countries, and we're seeing it with China, and I think we'll see it a little more with India, maybe in the next decade. These places are going to matter more than they do now. We can argue or debate about what that really means for the U.S., but it doesn't matter what it means for the U.S. The point here is, what if we have a Japan-like thing where the U.S. just is not a place to invest any money? Well, there are each of these countries, not each of them, most countries, probably all, have companies that are just as good as countries in the U.S. in terms of long-term, don't need to sell them unless there's death blow news type of companies. I'll put it underneath the video, but I've got a chart here. It's a 20-year chart comparing Johnson & Johnson, Bank America, and Altria with the S&P 500. Over 20 years, according to this, the S&P 500 is up not quite 400%. Bank America is up, I'm going to say exactly 600%. Altria, so that was Bank America up 600%. Altria up, it's more than 800, but I don't know how much it is. And Johnson & Johnson up what might be 900%. It's clearly less than 1,000%. But all of these, 900, 800, 600 versus, 350 or 375 for the S&P 500. Now, there were periods in those 20 years of nauseating underperformance. Johnson & Johnson and Altria both had periods where the stocks just were crushed, absolutely crushed. Bank America, not so much. There are periods of woeful underperformance. But the point being, 20-year time horizon, great companies. And these were the first three that I picked. Great companies, long time horizon, they did what they needed to do over the next 20 years. First of all, I don't subscribe that the U.S. is going to be like Japan. I don't think that's going to happen. But if it does, there are companies like this in other countries that you can seek out and own for a very long time. Now, to the extent that you want to try and trade them as time goes on, okay, you'll either have success or you won't. But if you don't try to trade them, if you're not one who is very likely to trade them, great companies over the long term, they do their thing. And this chart kind of bears it out. I mean, it just some ghastly declines in here, yet totally left the S&P 500 in its dust. And most countries have these types of companies. This is an easy thing to learn and do and implement in your portfolio. And frankly, I think, it's going to give better results than owning exchange-traded funds for the most part. Because all of these three that I've given you here, actually Johnson & Johnson, on the dividend, but Bank America and Altria, pretty good dividends. Johnson & Johnson just a little ahead of the market. But that's about it. This will probably whip up all sorts of criticism, which is fine. But the chart and time, speaks for itself. Have a good weekend.